Investors and traders, welcome to the channel. Today is 14th of September 2024. Hope everyone is having a great weekend. We'll be taking a look at the key US financial stocks and ETFs. As always, this video is for educational purposes only. It's not a financial advice. So we'll start by taking a look at the KRE, which is the Spider S&P Regional Banking ETF. So this is the weekly chart, and here we have been looking at for a possible completion of the pattern around $61 to $62 per share level, and here it looked like it might just get there, but we had this week when the market was really weak, and of course it bottomed around the 5th of August, and now it had a recovery high, but still quite a lot of work needs to be done. Now the good thing is that last week was actually positive, so it closed in the positive territory with a nice looking bullish candle. So there is a chance that we could actually go and hit our target, which would also be a pretty strong resistance level. Now the interesting thing is, if you just look at the daily chart, here we see that actually a lot of strength came into this market on Friday. So this is really interesting to watch. So this is what the KRE is telling us. Now, this is something really interesting about the KRE is these are small regional banks, and here this index had actually topped this ETF right around when the bear market was starting in 2022, and then this is where we had the trouble come to light with the SVB, Silicon Valley Bank. This is when the crash happened, when it actually came into light that SVB was basically belly up, with the possibility of few other regional banks actually possibly going bankrupt, and they did actually, but they were bought by some private equity groups, for example. Now the market was already telling us, it was something was already happening. It was just not something which just happened out of the blue. So this is why we really like to take a look at these financial sector in particular. And here is when the Fed, with the help of the Treasury, came out and they injected $300 billion in liquidity, which actually really helped the market and actually really shaped it up. And this is what we have seen in 2024. The market has had a pretty good recovery, but still moving towards our target, and hopefully it might just get there. So, this is why looking at the chart actually can tell us quite a lot of things, because there are some really clever people in the markets, really informed people, and they are leaving their footprints, which we see on the charts here. Now we'll move to XLF. And here we go. This is the weekly chart. Surprisingly, XLF is, if you look at its weekly candle, it's just a trading range, but there was a fair amount of volatility in this. And it did not even close positive for the week. So that's a little bit surprising, given the fact the regional banks were able to do that, although majority of their buying actually came in last Friday. So that's pretty interesting. But nonetheless, this market a little bit surprising in the sense that these are actually stocks which are bigger capitalization stocks. So what is really interesting is to actually look underneath what the price action for these stocks which are part of XLF look like. So which we are going to do next. And I think one of the reasons why this might have been weaker than expected, and if we just go and take a look at this on the daily chart, here we go. It did a nice ABCD right very close to 50% retracement, and then we have had some look at these candles. It's just like, I don't know what the volume looks like. I don't have volume here, but these are really range bound days, and it looks like, really towards the end buyers came in on the bot and took the market up. But I believe this is like for what we are seeing since 11th of September, this kind of price action. It might have to do with a handful of stocks which are part of this ETF. So for example, I think it might be because of Goldman Sachs. So let's actually have a look at the weekly chart of Goldman Sachs, and here we go. We have discussed this one before. Goldman actually completed its 1.6 minute expansion of the entire 2022 bear market. And it's just in a trading range, but this is also a sign of a distribution in my books. because the reason is you see quite a lot of back and forth two ways kind of a market, and in this entire run up we haven't seen that. We just had a couple of days where a couple of weeks, in fact, where the market was down. Here we had about a month, but small trading ranges. But here the volatility is quite a lot. This is the bottom of the range, this is the top of the range, is just range bound, and I think the selling pressure that came into this stock which is impacting the XLF, along with some of the other names, which we'll have a look shortly. So here we go. So this is last Tuesday, 10th of September, big down day in Goldman Sachs, and it's just trying to, maybe it looks like more of a short covering rally for over the course of last 3 days. So remains a range bound market here, but you can see that by just looking at the charts. You see so many bullish bars, so many bearish bars, so it's going to remain in this trading range for quite some time. And now let's take a look at JP Morgan. There we go. So the JP Morgan also closed negative. It's a little bit of surprising candle for me, because overall the market, the stock market, stock indices, S&P 500, they performed this week pretty good after forming that bottom. And here we have this big completion of their ABCDs that I also showed you in the monthly chart. So right here, just like Goldman, 1.618 expansion came in around 216. The stock went a little bit higher, but just it has pulled back. Now where it is right here, right now, the low of the last week around 200 mark is really key. The reason is that it has this symmetry here. So if you look at this entire CD leg, this is the largest pullback that we had seen back in 2023, and what it has done is it has done the same pullback now in terms of the magnitude. And if we just join these two lows, so we have a trend line as well, but what we also have going on is a basically, it's, you can see it's moving in a channel, and I'll show you that in a moment. And here we go, we can have a channel with an overshoot here, and then it came back into it. So in my opinion, it's really important, it holds the 200 mark. Now on the longer term monthly chart, this is really long term, and I have been of an opinion, and it's just an opinion, we trust the price action. My opinion doesn't matter that much, but we could see more distribution come into this stock, or the stock goes into a trading range. It's because there is a catalyst out there, and the catalyst is Jamie Dimon, who has been a superstar CEO. His tenure might be coming to end, as he actually publicly mentioned that he's looking at retirement, which means he might just move from JP Morgan as not being the CEO anymore, but he'll go and do something else. It's a fantastic CEO, and look at this diamond effect since 2009. A really strong looking chart. Now moving down to the daily chart, this is really interesting, because what the chart is doing is there is a possibility. If you just look at this is the channel that I was showing you on the weekly chart. So it's moving in this channel formation here, and it has had a couple of these smaller ABCDs, and we saw a pullback here, and then I think we might actually be able to do another ABCD, which could take the stock to about 234, which will be the 1.618 expansion of this range here. It has already done the 1.272, and then it pulled back right to the bottom of this channel. The chances are it could actually go and actually test the upper end one more time, hit that 1.618 expansion. So basically moving in a channel formation. And if we just look at this trend, which has been going on since October 2023, a very strong looking trend, and this is the first part of this trend. Look at how strong it was. Very few pullbacks, maybe one day, and then the trend will resume. And then this is where in April we had a bit of a pullback, and then it resumed its trend. But now what we are seeing is something a little bit different. Look how many bullish bars we have and how many bearish bars we have. So this just tells us that something is a little bit different. So the trend, which has been very strong since October 2023, it's transitioning and is becoming more of a two-way market as well. So bulls and bears. So this is what I mean when I look at the big picture, that we could have some distribution, because some institutions might be adjusting their positions. I don't know exactly what might be happening, but it is moving in this channel formation, and we could see the stock pop back up to 234, and then it could just pop back into the range, back in the range again. Now if it breaks below this trend line, this is the bottom of this channel, I would like to see 2 to 3 consecutive daily closes below the 200. Then of course the price action is telling us that okay, maybe there is further downside that is possible in the stock of JP Morgan. Now let's take a look at American Express. Here we go. So the American Express, again, it has completed this big ABCD, and the market is range bound. But look, compared to JP Morgan, compared to Goldman Sachs, it has had a fantastic trading week, closed positive. So with this kind of really strong momentum, it'll be really interesting if it is able to break above the 262, which would be an early indication that perhaps this CD leg might be extending. But right now, it is of a trading range behavior, in fact, and it's been going on for quite some time. So American Express stock shows a different kind of a picture of price actions as of yesterday compared to JP Morgan and Goldman Sachs. Now let's take a look at Citigroup. Not a great looking chart at all. So 61.8% retracement. It is just doing nothing there. Then let's take a look at Bank of America. This is one of our favorite banking stocks, but after completing this 40-50 level, it went a little bit higher just for a couple of days and pulled back here. It just like Morgan and Goldman, it hasn't had a positive week last week. It's interesting. So maybe overall markets like S&P 500 closed did pretty well last week, but the financial stocks looks like someone is selling those. There's a possibility it could pull back right into about 32 level, 32.50. That remains a possibility in Bank of America. Now, something really interesting. Let's take a look at the stock of Visa. So Visa is part of XLF, although I don't think Visa has got the banking license. But it is part of the XLF, and there is so much transaction volume that goes through Visa. So it's more of a tech company, I would imagine. It's more like a fintech than a bank itself. And here it's just got it has this breakout out of this trend line, and it's just moved back into this gap. This gap is something that we were watching. The chances are it's going for about $300 per share level, and maybe a little bit higher because of this strong move here. Now it has completed its big ABCD, and there is still a possibility it could go a little bit higher. The momentum is really strong. So there you go. If you are looking to do something in XLF, maybe Visa is price action looks much better than some of the bigger names. And then if we take a look at Mastercard, here we go. The Mastercard is actually a little bit stronger because it has already gone above the point D, which is 18th of March 2024 highs. So I would like to see some sustained move, but there you go. So Visa is lagging a little bit behind, but the Mastercard seems to be a little bit stronger. So it's very interesting to see some of the big banks actually lag a little bit, and some of these fintech kind of companies doing better past week. Now let's take a look at Warren Buffett's company, Berkshire. Here we go. So weekly chart of Berkshire. Now very interesting. Berkshire has also completed big ABCD. Now the interesting part is so many of these stocks are actually completing their big ABCDs. So that's an interesting observation. And in the past, we have seen when we have this kind of ABCD completed, which is going back several years, this usually leads to a pullback. And we have seen in Berkshire, this is the second consecutive week that the stock has actually pulled back. Now the momentum is extremely strong. Look at the 200-week moving average followed by 89-week moving average, and look how far below is the 200-week moving average. So nothing wrong there. But this is the BC swing, and if we just look at the market symmetry concept, if there is going to be a bigger correction, then the stock could actually pull back to about $380 per share level. That might be a possibility, because the way the stock closed last week is really interesting, because not only it took out the lows of the previous week, which is the 3rd of September, it took out this bullish bar of 26th of August week as well. So that shows there is perhaps a further weakness. I don't know who might be selling this stock. Maybe it might be Warren Buffett himself. I don't know exactly. But this is what we see, what the chart is telling us. Now the 38.2% retracement comes around 390 or roughly $400, and the symmetry comes a little bit below, about 380. So that could be the first target if we are actually seeing a start of a serious pullback. So we'll be actually keeping a really close eye on this. Now, if we just take a look at this is the monthly chart. This is going back several years in the Berkshire's Class B stock. And something really interesting to see here. One thing is that look at this blue line. This is when it had completed its ABCD before. And that was in March of 2022, right? And then that's when we had that bear market with that BC swing we looked at on the weekly chart. Now, here what we have going on is two things. Look at the CD leg. This CD leg is actually the 1.618 extension of the AB leg. And then we have another smaller ABCD completing right there. So we have basically a confluence of two patterns completing there. And whenever we have a confluence of two patterns, we pay very close attention to those levels, because quite often they turn out to be turning points. Now, of course, the month is not complete yet. So we don't know whether the month will close positive or negative. But if it did close, negative for the month, then that is something which we should pay a really close attention to, because that could indicate either a sideways to lower market. So we could go sideways for quite some time, or we can continue the trend lower. But this is what we are paying very close attention to, because we have the extended ABCD, and then we also have this ABCD, which is the smaller one, starting from the lows of March of 2020, and the smaller one, which is small for Berkshire. There are many stocks that we have seen which are actually completing these ABCDs in the financial stocks since the lows of March 2020. So it's very interesting. Maybe some sort of a pullback might be in the making, or we could see a trading range to maybe even slightly higher highs if the Fed begins to basically stimulate the economy by lowering the interest rate. There should be some elements of impact coming from that. But we have also seen back in 2007, when the Fed actually started to lower rates, the market just started to go down. Now the fundamentals are different, of course, this time around, so we'll have to wait and see. But this is what the patterns are telling us in the financial stocks, and we looked at quite a lot of stocks. So if there is some financial stock that you would like me to take a look at, please do mention it in the comments, and I will try to accommodate that. So thank you very much for watching the video. I hope you found it of educational value, and if you did, and then please do subscribe to the channel, and if you do, then hit that bell icon button. That way you will not miss any new videos. And if you like our analysis, technical analysis, then give it a thumbs up. I will really appreciate that. So thank you very much once again. Good luck, good trading, and speak to you guys soon.